Hello, everybody, and welcome to our show today. Today, we'll be diving in and we're going to be talking about the FICO score. We're going to talk about all kinds of things that you should know about the FICO score, but probably don't know now, and some of the things you may know that are a little bit different than what you may have thought actually is the case. So we're going to be diving in, decoding how this whole thing works. My goal isn't just to teach you how the FICO score works; it's to teach you what you need to know to control your own score, because very slight changes on your part can make very dramatic differences in your actual score. For those of you that don't know me, my name is Ty Crandall. I'm the CEO here at Credit Suite. And at Credit Suite, we help businesses get capital. And we do so by helping you improve your fundability by things like improving your business and consumer credit scores. Also going through and accessing all kinds of capital and getting business credit for your EIN that's not linked to your social security number. So if we can help you along the way, feel free to visit us at creditsuite.com or grab your free guide on building business credit at creditsuite.com/EIN. Okay, so FICO, what is it? Well, this is Fair Isaac Corporation that's actually officially changed their name to FICO now, which is one of several companies that provide software for calculating the person's credit score. Okay, it's the largest and most well-known of these. Okay, FICO is the main standard when it comes to credit scoring, as we all know, at least in the consumer world. So who uses this? Well, credit agencies are the primary user, right? So FICO develops their own score, and then the main reporting agencies, TransUnion, Equifax, and Experian, are then using that score and populating it onto their credit reports. Okay, Experian, Equifax, TransUnion. But again, don't forget, there's a lot of other credit reporting agencies out there. As a matter of fact, these three have just gobbled up most of the other ones. You know, many years, even decades ago, there were just thousands of regional credit bureaus. And then what happens is as they get big enough, Equifax, Experian, TransUnion just come in, gobble them up, buy them up. I have friends now that are actually doing some cool things that are in the credit scoring world. And that's their whole exit plan, is to get bought by these three, as most in this world are. Okay, so they're using it to calculate credit scores based on the 5 main factors. And this is one of the things we're going to dive into today. So here's the 5 main factors that make up the FICO score: payment history, how you pay your bills; credit utilization, what percentage of your actual limits you're using. And this also applies to loans, which we'll talk about, not just credit cards; length of credit history, what's the oldest account you've had and the average age of all of your accounts. Okay, new credit, how many new inquiries do you have? More important, how many groupings of inquiries you have. We'll talk about that. Groupings affect the score, individual inquiries really don't. And the credit mix, what credit mix you have, the mix, the different types of credit you have calculating your score. We're going to break all these down individually. They're all weighted differently, and we'll talk about that. So let's talk about payment history and amount owed. Do you make payments consistently on time? Well, this accounts for the largest portion of the FICO score, but you want to keep track of the math here. It's very, very, very important. I'm about to show you one of the most valuable tips as we get to the next section of the FICO score, is something that's easy for you to control that dramatically increases your scores. So pay attention to that percentage. 35% of your total score is based on how you pay your bills, how much you owe versus how much credit, or actually that is not utilization. I don't know why that's on that slide. So credit utilization ratio is the how much credit available to you, and that's 30% of the score. So here's why I want to show this to you. Okay, when we look at payment history accounts for 35% of your score, how you pay your bill. Utilization, what percentage of your credit limits you're utilizing, account for 30% of your score. Based on this basic math of FICO, FICO is telling you that keeping limits or keeping balances low on credit cards is almost equally proportionally important to you actually paying your bills on time. Not per me, that's the math, right? 35% is payment history, 30% is what you owe. So what FICO is telling you here is that paying your bills is important. Almost equally important is keeping balances low, especially on revolving credit. So let's talk about length of credit history, new debt, and your credit mix. Okay, so these are the other two of the other factors that calculate in this. What's the average age of your debt? Okay, the older the better. Basically, what's the oldest account you've ever had on the credit reports? And credit history is 15% of your total score. It's the 3rd largest factor of FICO. Okay, too much new debt makes you look desperate for credit, and that includes if you're getting credit cards, loans, lines of credit. So new debt, inquiries, new credit you're applying for, that accounts for 10% of the overall score. More than one type of debt, a good mix of credit, types of loans, credit cards, auto, mortgages, consumer credit, that accounts for 10% of the score too. And don't worry, we're going to dive in. I'm going to teach you the right credit mix to get. I'm going to teach you things you need to do in every aspect of the score to improve each aspect of the score. Now, FICO 9 is one of the newest models. Okay, it's not yet really everywhere, but includes some additional considerations, like you can include rental payments, which is a big deal. I mean, I've been in financial services for going on 2 decades, and I can tell you that we pushed and pushed and pushed to get this added for years and years and years. So rental payments, landlords are required to report, not required to report, but can. Okay, so medical debt does not count against credit scores as much, meaning lower medical collections don't even calculate into the score anymore. That was a huge deal. Somebody used to have a medical collection for $50, $100, and it would crush their credit score. They've changed that with a new FICO score. They can still be reported, but again, it just doesn't lower the score as much. Collections, if you pay the debt out of collections, it doesn't count against you. I need to stop right here and tell you the importance of what I just said. For many years, I advise people never pay off collections unless they will give you a letter and tell you they're going to delete the account. And here's why. How recent a negative item is on your credit, it affects how much damage it does to your score. Obviously, a recent late payment dramatically affects your score much more than if you had a late payment a year, 2 years, 3 years ago. The problem had always been if you paid off a collection, you updated the date of last activity, you brought that account current, and that would actually hurt your score. So paying off collections would actually hurt your scores because the date of last activity on that collection was updated. They changed that now. They got smart and said, okay, now we're going to change this. So what will happen is now it won't have that effect. So if you pay debt out of collections, it's not going to hurt your score like it used to actually do. Okay, so who has a FICO score? Well, you've got to have open credit. The credit must be reported to at least one reporting agency, and you've got to have it for 6 months. Here's why this is a really big deal. In the business credit world, in 6 months, you could have $100,000, $50,000 in established business credit. One account reports to Experian and Equifax, 3 accounts reported to Dun & Bradstreet. That would automatically create a score for you. You could get scores in the business world in 1 month. That's why business credit's so fast to build. FICO, much slower process here. You've got to have credit for 6 months reported before they'll even give you a score. Now, a lot of people watching this already have established credit, so it's not a factor. But again, you've got to have credit for 6 months to be able to get a score with them. And you've got to have at least one account reporting for 6 months to do that. So how can you know your FICO score? Well, there's a lot of places you can get it. Okay, you can get a free copy per year to see if you have any mistakes. And that's through annualcreditreport.com. Annualcreditreport.com is the only real place you can get a real credit report that I know of that they're not going to take a credit card or basically try to get you into their credit monitoring. Okay, a lot of places will give you 30 days of free credit, but then or credit monitoring, but the reality is they start charging you after 30 days. If you want a real free credit report, you go to annualcreditreport.com. Now, you can always join a credit monitoring service, but again, you're going to be paying monthly for that, 10 to $30, but you can still see a lot of the accounts that are affecting your score and see up-to-date information. So what's a good score? Well, scores range from 300 to 850. 300 is the worst possible score. 850 is perfect. Most scores fall between 5 and 800. Average credit is considered 700, but again, that's really, or below 700. 700 is where it kind of is considered to be good, the 700 to 720 range, but not great. 800 is when you really start to get into great credit. So let's talk about ways you can affect your FICO. Okay, you can affect ability to get business financing by working with your FICO score. So a poor FICO score can tank your ability to get business funding. If you have no business credit, lenders are going to look at that FICO score instead. And your personal FICO can also affect what's called your FICO SBSS. So FICO does have a business score, small business score called their SBSS. Here's how SBSS works. SBSS takes into account Your business credit scores first, your consumer credit score second. So if you don't have established business credit, the weight of your consumer credit scores becomes really, really, really important in the weight of this score. Why should you care? You can't even get an SBA loan if you don't have a high enough FICO SBSS score. So what I'm saying is that if you're trying to get business loans, if you're an entrepreneur, if you're trying to get business credit, business financing, then you need to really work on getting your FICO score as high as possible. Because if you don't do that, then what happens if you don't build business credit, that becomes the driving force that lenders use. If you have damaged personal credit and you want to offset that, build business credit. By building business credit, what you're doing is then establishing a credit profile and score for the business that's then weighted heavier into these scores, so then your consumer credit score really won't matter. That's not only just the fact that with FICO SBSS, it's also the fact with experience what they call blended score. Their blended score takes into account commercial and consumer credit history. If you build your commercial, your business credit history, then your consumer credit history just won't tie it in as much. So talk about FICO SBSS. Let's talk about this a little bit more. So this is the business version of personal FICO, okay? Other agencies, you know what? I got a bunch of stuff, but I'm going to do something I don't usually do. I'm going to go back, way back, and I'm going to talk to you a little bit more about these factors because I think it's important enough to do so. And don't worry, I'm going to skip past. I will make good use of your time. I promise I will. So let's talk about these two factors because I want to talk a little bit more about tips to do to improve this as we get too far down the rabbit hole. So when we talk about payment history, it's pretty obvious, right? Pay your bills as agreed, but it's not so obvious because the key here with business and consumer credit is to have as many accounts that are positive on your credit report as possible. If you want to offset going late on an account, have a bunch of non-late accounts. So this is one of the things that we do to help people build business credit. We say, hey, look, if you have a damage because of a late payment on an account, then get 5 more accounts that you're paying perfectly. And those 5 will offset the negative, and it won't get you back as if the negative never happened, but it's the best way to offset that damage. So the best key here to have the best payment history is have as many payment accounts as you can that you're paying as agreed to help offset any that you don't. Now, the second factor I want to talk about here as I'm jumping back is utilization. 30% of your revolving accounts are based on the balances you have in relation to the limits. Now, here's why that's important. Because first of all, if you want to really raise your score, I'm going to give you the best tip. It's an awesome tip. What you do is you get accounts with higher limits on your credit report. Now, there's a lot of these type of accounts out there. There's an account called My Jewelers Club, and you pay My Jewelers Club $100, $200. They give you a $5,000 credit limit account in their store. Okay, I'm not giving you an affiliate link. I'm not trying to make money on this. I'm just giving you one of the best tips I've ever learned from owning a consumer credit company. And so what happens is this. I typically find people with credit issues do not have high credit limits, obviously, right? You have $500, $1,000 credit card limits max when you have credit issues. So one of the best things we used to help people fix consumer credit. I do not do that now, just so you know. I have been out of that for many, many, many years. But when we used to, what I used to do was help people get accounts like My Jewelers Club. And then what it would do, and there's another one called Huntington, I'm not sure, Hunter Chase, something along that line. Same thing. You pay them a couple $100. They give you $5,000 worth of spending in their store. They report to 2 or 3. It's Hutton Chase. They report to multiple reporting agencies. And what happens is they add a $5,000 limit account on your credit report with a 0 balance. Now, that available credit would spike people's score in some cases 25. I've seen over 100-point increase to the score just because that one account was added. So there's 2 things you need to do with utilization. It's one of the easiest factors you can control with your score, and it's a third of your total score. 1, get a high limit account or multiple on your credit report. If you have damaged credit, that's harder to do. I get it. You can either front the money for a secured card, go to a couple of those sources I just told you to kind of get the credit lines in their stores, and then that will give you higher limit credit that reports on your actual credit report. And that will dramatically increase your scores in a lot of cases because, again, if you have credit issues, you don't usually have high limits. That's part of why your scores are low, because you don't have the high limits. That'll help it. The second thing is constantly, every 6 months at least, call your credit issuers and ask them to raise your limits. I always ask them if they're going to pull my credit. If they put a hard inquiry in my credit, I won't let them do this. But if it's a soft inquiry or they don't pull the credit, I let them do it. And what that allows them to do is they allow, if I'm spending and paying my bill on time, they oftentimes will raise my limit. Now, this is insane in the business world. And in the business world, every time I get Amex, I ask them for double my limit, and they give it to me. 100% of the time so far, they've given it to me. So constantly ask. Now, you're not going to expect that in the consumer side, but ask to have your limit raised. Since a 30-year scores your utilization, by raising your limits, you dramatically can increase your score. So do that every 6 months. And again, if you've got credit issues, look at some of those other sources I mentioned. Now, let's talk about these other two. Credit history, 10, 15% of your score, or how long you've had credit for. You can beat this with authorized users. If you have somebody, let's say my mom and dad, okay? My mom and dad have excellent credit. They've had credit for who knows how long time. Well, you cannot add accounts to your credit report and backdate them. But what you can do is get yourself added as an authorized user. In my case, like to my mom and dad's credit card, okay? Then what would happen is I would get credit for all that history that they have on those accounts. So if you want to boost this aspect of the score, there's only one way to do it. You go and you add accounts, obviously as soon as you can in your credit report. But the only way to beat this is to actually get added as an authorized user. It adds that credit history and will help you maximize that aspect of the score. Let's talk about new debts. Several things going on here. When we talk about inquiries, you need to know that an inquiry will not really affect your credit score. Inquiries don't drop your credit score. What happens is they're looking for groupings of inquiries. They're looking to see that you've been out looking to get a bunch of credit in a short period of time. A groupings or a bunch of inquiries will lower your score. So now this does not count for auto and mortgage. If you go to get a mortgage or go to get a car loan, those inquiries will show in your credit report, but they'll only calculate in your score as one inquiry if they're within 30 days. So I can go to 20 mortgage brokers. They can all pull my credit. It all shows on my credit report, but only one inquiry would count into my score if I did those 20 within 30 days. Okay, so you need to know auto and mortgage are different. That's how that works. So that being said, don't apply for a bunch of credit in a short period of time, especially if you get turned down. This factor of FICO takes into account not only the amount of inquiries you have, but the amount of inquiries you have that relate to new credit being added to the credit report. So what FICO is telling you is by applying at a bunch of places in a short period of time, it'll hurt you. By applying at a bunch of places in a short period of time and not getting approved, it'll hurt you even more. That's why they think you're applying for a bunch of credit in a short period of time. So some things to keep in mind when it comes to that aspect of the score. Let's talk about the final aspect, credit mix. What FICO prefers is 1 to 2 mortgages on your credit report, 1 to 2 auto loans, 1 to 2 signature loans, and 2 major credit cards, and then you can have some store cards as well. I am not telling you to go shut down credit cards. I have way more than 2. I have, I don't even know, a bunch of credit cards, okay? But I don't shut them down, and I don't think you should either. I'm just letting you know the perfect credit mix from FICO is 1 to 2 mortgages, 1 to 2 auto, 1 to 2 signature loans or other kinds of basic loans, and then also 2 major credit cards with some store credit cards as well. That's what they're looking for the right credit mix. Okay, now I'm going to go back to where we were. I felt it important to give those tips, and I don't think we are going to get that done. So let me go ahead and get back to exactly where I was. Okay, so as we talked about with FICO SBSS, they are looking at personal credit and they are looking at business credit as well. Okay, so they're calculating that into the score. Now, again, what they're going to do is they're going to then pull these other agencies, Experian, Equifax, Dun & Bradstreet, to calculate that into this FICO SBSS score. Remember, this is your FICO business score. If they don't have a lot of weight here, they go to your personal as a result. So what you need to do is you need to make sure that you build business credit so your personal FICO doesn't matter as much when you go to get business credit financing. So remember, FICO SBSS, it's a big combination of business and personal history. Lenders can weigh factors differently. They can choose whether personal credit or business credit counts more. So each lender that uses FICO SBSS can control how much weight each of those scores calculates into the overall. But I will tell you, they're almost all the same. They're looking at Dun & Bradstreet first. They're looking at Equifax, Experian second and third. business. Then they go to your personal credit after that. So if you've got good business credit, it can definitely offset damaged personal credit. Okay. And so as a result, again, you can have a good business credit FICO or FICO SBSS score, even if your consumer credit's not good. So remember, lender requests a score and gives weighting preferences. Then software pulls the credit from all the available sources, Dun & Bradstreet, Equifax, Experian, your consumer credit, etc. If there's not enough available from one source, it moves to the next. So let's say this. Okay. The lender says, okay, we want Dun & Bradstreet to be first, Experian Business to be second, Equifax Business to be third. So they send it out. They say, I got a credit pull for this person. The software goes in and goes, let's pull their Dun & Bradstreet first to calculate it into FICO SBSS. Up, there's nothing here. Let's go to Experian and pull it second. Oh, there's no business credit here either. Let's go to Equifax business credit. Oh, there's no business credit established here. Let's go to consumer. Oh, there's credit here. Now that consumer credit would calculate heavily into the score because no business credit's available. So they're going through these sources that I just showed you here in order that they've set up, and then usually going to personal credit after that. Okay, so that's how that works. So it's very important to know that you build your consumer and business credit, because when it comes to FICO SBSS, what they're really looking for is commercial credit first, consumer credit after. Scores from this range from 0 to 300. 140 to 180 is considered good. Remember, let me just say 140 is the bare minimum you need to have to get approved. And 180, you're getting up there higher. Remember, your scores can differ based on how lender weighs those factors. So a lot of places are using this. Okay, SBA, they require a 140. A lot of lenders are going to require a 160 just because so you're not scraping bottom with SBA. Okay, lenders are using this in a lot of cases as well. So personal FICO, as we mentioned, is a factor in FICO SBSS. A low personal score can lower that, especially if you don't have business credit. So at the start, you're not going to have much of a choice when you don't, or just starting to build business credit. Then it all comes down to your personal credit. So again, these are the reasons that you want to build business credit. Otherwise, you're going to find funding a business is going to be pretty expensive because you're going to pay higher rates. So what do? We'll use personal credit if you absolutely must in the beginning, but quickly move towards establishing business credit. And why do we do this? Think about what I just showed you with a FICO score. 30% of your utilization is what percentage of your high credit limit you're using. So the problem I see most business owners make is they use their personal credit to fund a business. The business takes a lot more money than they expected. It takes a lot longer for it to produce revenue. And then they've maxed out their personal credit cards, which you now know that's a third of your total score, almost as much as paying your payments late. That's the damage you're causing. Then they try to go get loans and such and can't do it. This is why you need to establish business credit. You could max out your business credit cards that report to the business credit reporting agencies and not lower your consumer scores even a bit because none of that credit reports there. So if I go to get a credit card for $20,000 with Staples and it reports to Dun & Bradstreet as it does, okay, now I could max out the credit card. $20,000 I could owe. My Dun & Bradstreet score would not even adversely go down at all, because my Dun & Bradstreet score is based only on how I pay. And my consumer scores, my TransUnion, my Equifax, and Experian, none of those would be impacted either because the credit only reported to Dun & Bradstreet. So this is why you want to establish business credit and get business credit cards that only report to the business credit reporting agencies, Dun & Bradstreet, Equifax, and Experian Commercial. That way you could max out those cards, use them wildly or freely without impacting your consumer score. Here's how this looks in my business. I have a Capital One Spark card. It reports to business and personal. It's our last resort credit card, so it never gets used because I don't want to use it for the business because it affects my personal credit. We have other business credit cards that only report to the reporting agencies, Dun & Bradstreet, Equifax, and Experian Commercial. Those are our primary cards. We use our primary cards. It builds our business credit. It doesn't affect my consumer credit. And as last resort, and I don't even think we use that credit card at all. Might not even be open because we don't use it. We use the one that reports to personal. It's exactly how you should be doing things. So you want to work towards doing business on that company credit. And now that you're understanding how credit works, you understand the difference of separating those reports and those scores. So how do you do this? How do you offset it? Well, this really comes down to establishing and building business credit. Now, remember, there's a lot of steps to be able to do that. Okay, you want to best start at the beginning, but again, if you've been in business for years, it's not too late. Just keep in mind, a lot of people ask, how long does it take to build business credit? My answer is always the same. Well, how long did it take you to build your consumer credit? And then they always stop And they don't have an answer. And I say, exactly, I don't have an answer either, because it's never ending. You never stop building credit. It's ongoing. The more credit you get, the more that you get, right? The more credit you get and use, the higher the limits on the future credit, and the more credit you apply for. It's an ongoing process. Although it is much faster than consumer credit to build, it is an ongoing process that takes time. You've got to get that business set up. You've got to get your EIN number set up. Okay, you want to get a business bank account set up. Now, a bank account's not needed to get business credit cards, but to get business credit cards for your EIN that aren't linked to your social, they are going to want you to have business bank references in some cases, which you wouldn't have if you didn't have a business bank account, okay? And then, of course, use that bank account to handle your business finances. Get a toll-free number for your business, okay? Get a brick and mortar address if you really need a brick and mortar address. If not, get a virtual address set up to start establishing that business credit as well. And then you want to start getting credit with vendors, okay? These are places that will give you credit like net 30 terms, like Quill, Uline, Granger. These little guys will give you credit with $500, $1,000, $2,000 limits, and they report it to Dun & Bradstreet. They report it to Equifax. They report it to Experian. Remember why we're doing this. What our goal with building business credit is to help you protect the consumer credit. That's the goal. Okay, again, the biggest mistake I see business owners make is they mine that consumer credit. They max out those consumer credit cards to build their business. It's a huge mistake, because if you don't do that, if you leave your consumer credit alone, it could be used to secure all kinds of credit lines and loans. Use your business credit to get credit cards. Use your consumer credit to help you get loans and help you get credit lines. You can only do that if you start following the steps and building this initial business credit. Start getting accounts that report to the business credit reporting agencies. Now, as I mentioned, the beautiful thing is, unlike the consumer FICO, where it takes 6 months to establish a score, in our world, in the business world, once any of these accounts hit your Experian or Equifax, that will immediately populate a report and score. And since Equifax's score is based only on business credit history, Equifax's business credit score, and since Experian's business credit score is 65% or based, or up to 85% based on payment history, if you pay your bill on time or early, that'll give you a good score if even one of these accounts hits that business report. Dun & Bradstreet requires 3 to be reported to give you that business credit report and score. But once you establish some credit with these vendors, and some of them, others will give you trade references, then that will establish that initial credit report and score for you and help you start securing revolving business credit. So what if you already have a bad FICO SBSS? Well, it's not too late. It will take some time to rebuild, but it will be well worth it, because anything below 140, you're just not going to be able to get the financing that you need to know, or that you need to get. So you cannot really get a copy of your SBSS report at this time. And by the way, I'm working on this. We are aggressively trying to get you access to FICO SBSS. It's not front facing yet. And NAB has been on this to try to get it done. We've been working with NAB to try to get done. We want you to see FICO SBSS, because anybody that follows me and follows us here at Credit Suite, we are anal about transparency. We believe the banking industry and credit history is completely broken, and that you, as a business owner, as a consumer, need to know what they know to have a fair advantage. So the fact that lenders are using this data and you can't access it is absurdly ridiculous. And we are trying to help solve that problem. But right now, you can't get a copy of that report. Okay. And it's also because change is based on how the lender weights the score. It's different for every lender. But you can see which factors are pulling your score down and work to improve them, and get copies of supporting documents if you need to. So remember that FICO Personal Credit Report tallies into FICO SBSS. Public records tally in. What you really need to do is go to LexisNexis. If you go to creditsuite.com/LexisNexis, and you can Google it to figure out the spelling, all those type of things, get your LexisNexis credit report. Your LexisNexis credit report will even give you a more in-depth look to public records, as well as a lot of the juice that's used to power these scores. Your business financials as well. Any of that's public will calculate into those scores. Okay, look at what's pulling your FICO down. If it's payment history, payment those bills on time. Work on adding more positive accounts. If it's debt utilization, again, open more credit, but again, also consider raising the limits on your current accounts. This is another interesting discrepancy with FICO. what I found, I can't stand consumer credit scoring because business credit scoring makes so much more sense because it's just based on how you pay your bills. But consumer credit scoring, it's almost set up to sabotage you. And by that, I mean, think about it. If you improve one aspect of your score, you hurt another. So let's see here. You're paying your payments late. So it's bringing down the 35% aspect of your score that's payment history. How do we offset that? We get more positive accounts, right? If we get more positive accounts, that offsets the negative. Sounds easy enough. But what happens when we apply for new credit? We put inquiries on the credit report and we lower the new credit aspect of the score. This is the way FICO deliberately is. If you try to improve one aspect of the score, you hurt another. If you go to improve the credit mix, for example, then you're putting new inquiries on the credit report because you're getting car loans, mortgages, credit cards. And then when you get a car loan and a mortgage, your score will immediately drop because utilization is 30% of the score, and that works on loans as well. So if I get a loan for $20,000 for a car and I owe $20,000 because I just got the loan, it hurts my score. So when you try to fix one aspect of the consumer FICO score, you'll commonly see you damage another. This is why you need to know the math of what carries the most weight. If I'm trying to improve payment history, I'm not going to care about adding inquiries that only affect 10% of my score when I'm trying to improve the aspect that's 35% of my score. That's why that math I showed you is so important. Again, opening new credit can change the debt to utilization ratio, as we talked about. So age of accounts affects your score also. Age does not affect your score as much as debt utilization. So again, this is what I'm saying. Keep the reason we started with the math is so you know which factors to focus on improving and know that you're going to probably damage another aspect of the score, like by improving your utilization or by improving your payment history, by adding more positive accounts, you offset the new credit part of the score. But again, it's such a big difference between the weight of those different aspects that you want to focus on the higher weight aspect first, which is payment history and utilization. If your average age, because think about it, your payment history is 35% of your score. Your utilization is 30, 65% of your total score is those two factors. By adding as many positive accounts as you can, by paying your bills as agreed, by getting your limits raised ongoing, by adding accounts that have higher limits, those are the two things. And if you just manage those two things, make dramatic differences here when you're actually coming in and you're able to get, I think I'm doing this, and you're able to come in and be able to get what you need. So if your credit mix is a problem, consider finding a new type of debt to mix it up a little, okay? Remember, don't forget the offset of your credit that you're offsetting, meaning if you're getting new credit, to get the right credit mix, you're affecting your increase. Public records include judgments and liens also. Other derogatory marks against your business, okay, there's both business and consumer public records. Matter of fact, even lawsuits affect your business credit or will show on your business credit. So things you should know, that's not what you find in the consumer world. Find them and figure out how to remedy the problem. Okay, and the best way I will tell you, go to LexisNexis, please, please, please. I beg you to hear me out. LexisNexis is where all these guys get their data. That's where they all get it. Okay. Capital One just rolled out this awesome program that they prompt us, hey, get your business credit reports for free. Get your business credit monitoring. All they are doing is pulling LexisNexis data. That's all they're doing. LexisNexis is where all these guys get their data from. That's why we just partnered with LexisNexis. We actually partnered with them to create the very first ever front-facing score from LexisNexis. We went to LexisNexis and said, this is ridiculous. Lenders and credit issuers use your data to make decisions and consumers can't access it. It's not fair. We want to bring your data to them. And they said, great, we do too. We were like, that was easy. And we formed a partnership. So now we actually are getting ready this year to roll out a fundability score that will show you what's on your will show you discrepancies between what you think is there and what's on your LexisNexis credit report. Get LexisNexis. By manually ordering your LexisNexis credit report, that's going to help you figure out where they're getting this data from, dispute it with LexisNexis to fix it. And if you go to youtube.com/credit suite, type in LexisNexis, you'll see our training on LexisNexis. I even spent 90 minutes and went through my own LexisNexis credit report just to show you what's on it, because you'll be blown away. Like your boating records, your firearms records, your entire traffic history, every speeding ticket you've ever had, your criminal history, your housing history, every mortgage you've ever owned, every home you've ever owned, the materials that are used to build your home. Yeah, It says how big your home is, the square footage, the garage, the block type that's used, the type of roof. It's all on your LexisNexis credit report. It's mind-blowing how much information is there. And we covered about 90 minutes on just that. Okay, so again, is there anything on those financials that could be affecting your score negatively? You know, the business world's very different than consumer. In the business world, you can voluntarily supply your financials to the reporting agencies, and it affects different scores they have that are based on financial stability. The problem is if they don't have your financials, they look at the number of employees you have instead. So if you're a startup and have like no employees, and you'll say you've been in business 1 or 2 years, by not showing them that you're generating revenue and profits, you could be hurting yourself because they're holding it against you that you have fewer employees. So in the business world, if your financials are good, but not good, fix them. If they are good, well, of course, legally fix them. Don't just change stuff to make them good. Work with your CPAs and accountants to figure out what you need to do to improve them, and then get those to the reporting agencies. It actually helps your scores. So request corrections from the issuing agency in writing. Okay, send correct information with backup documentation, send copies of documentation, never the original. So consumer and business credit, this is absolutely not a video where I'm talking about how to fix either one of them. I'm not. Okay, so if you want to learn that, I think if you go to youtube.com/credit suite, we've got videos on both topics, how to fix damaged business credit and how to fix damaged consumer credit. I've got whole topics, hour-long topics that map out the exact details of how to fix those. But the bottom line is keep up on your credit reports for your business and personally, monitor them regularly, look for inaccuracies and negatives and things that aren't verifiable or aren't timely and shouldn't be there, and dispute those with the consumer and with the business reporting agencies. It's your right under law to dispute it on the consumer credit. You don't have those same rights in the business world, but the reporting agencies in the business world are very easy to work with to help you with this. So FICO is a model for calculating your personal credit score, payment history, credit utilization, as we talked about, the most important factors. FICO SBSS is a business credit score. Your personal FICO does affect that, especially if you have an established business credit. So build that business credit, get those financials that they're good to the reporting agencies, make sure you're checking public records, access your LexisNexis, do these things so you know where this data is coming from. You could build your business credit, which can offset any damage to your consumer credit in that FICO SBSS score. Okay, most important thing, pay your bills on time. In the business world, this is the #1 factor that affects 2 of the 3 scores, 85% of the 3rd score. In the consumer world, it's the biggest factor that affects your score. Pay your bills on time. Now, remember, big differences here. In the consumer credit world, if you don't pay beyond 30 days late, you don't get counted as late. You have to pay. If you paid over 30 days late, you get it counted as a late payment. In the business world, if you pay 1 day past the due date, then it's considered late. Now, it's not late or on time in the business world. It's how late you pay, meaning that there's a difference between somebody that's 30 days DBT, or day beyond terms. I give you that just because if you pull your business reports, you constantly see this DBT. There's a difference between paying 30 days day beyond term and 15 days beyond term. So in the business world, remember, late is considered 1 day late. In the consumer world, on your credit report, it's considered 30 days is when they have to report it, or when they will report it when you're over 30 days late. You need to know about that as well. So that gives you a bunch of fantastic secrets to your FICO score. I mean, we talked about consumer credit FICO. We talked about business FICO. We talked about the difference between both of them. We talked about things you could do to improve consumer FICO, business FICO. We talked about business credit scores we talked about a bunch of different stuff. Now, if you want more information, go to Credit Suite or go to youtube.com/Credit Suite. We have individual 30 to 60 minute training on Dun & Bradstreet score, Equifax's commercial score, Experience commercial score, 30 to 60 minute training on FICO SBSS score, all the aspects of how this works. We have training on the difference between consumer and commercial scores that directly compare and contrast them. We have it on LexisNexis. We have individual training on all of these so you can dive in deeper. I just wanted to give you an overview and as fast as I could give you the secrets on all to make the most improvements. And remember, if you're looking to get money for your business, well, look us up, creditsuite.com. Okay, 877-600-2487. We can help you get capital for your business in a lot of cases when you're not able to get approved elsewhere. We have a bunch of funding programs that work for you. Even if you have credit issues, we can still help you there. And we, of course, help you with all aspects of building business credit for your EIN that's not linked to your personal social. So then that way you can get away from your personal credit and start funding your business based on your business credit quality instead. And again, if you have questions along the way, 877-600-2487. If you're watching this on YouTube, please like the video and subscribe if you got some value out of this. If you're listening on our podcast, then go ahead, leave us a quick review if you like what you're hearing, and make sure that you keep track, because we typically are releasing episodes twice a week on our podcast. One is training like this, and one is an interview with some genius in their field that will give you all kinds of tips and tactics that will help you grow your business. Thanks for tuning in, everybody. I look forward to seeing you next week here at 1 o'clock on both. We will be going, you will see us on iTunes and you'll see us on YouTube Live. Thanks, everybody. Have a great day.